Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Monday, and it's January 28th. We're already almost done with our first month of the year, so let's jump right to it. We only got a couple of economic news releases scheduled for today, and the first one is durable goods orders for the month of December. We had a 0.7% growth in the month of November, and we had a figure would be up to 2.3 for the month of December, and it exceeded that at 4.6. Now, if you strip out the big ticket items like planes and stuff like that, it would actually come in closer to the what the forecast number is, but still a pretty decent number, and obviously the investors are liking that because it is important, big important item here, as these are the people who are out buying like your washing machines, dryers, and stuff like that, bigger ticket items out there. The consumers are, so that's good to see that the people are actually out buying and spending. The other item here is pending home sales for the month of December. So the month of November, we had a 1.6% growth, and it actually pulled back in December. So this was kind of a surprise that people pulled back. There's contraction. It dropped about 4.3%, and the number of pending home sales for the month of December. So a little bit of a surprise there. We do got a lot of volatility this week. We do have a lot of economic news releases scheduled for this week, so we will have a little bit of a roller coaster ride here in the market. So I'd be very cautious. We'll go over to headline news, and the only item here we really have is stock market is currently a little mixed right now. The Dow and the I believe it was Nasdaq were both down a little bit, where the S&P was up. Now we'll take a look at the bond market, see what interest rates are doing. As you can see here, we have a pretty sharp decline here in the drop in the mortgage-backed securities, where we started off earlier about Wednesday of last week. We were all the way up to about 104, almost 104.40. Now we're touching 103.19. That's about 120 basis points swing there. What that means is let's say if par pricing was at 4% rate, now it's going to cost almost 1.2% just to get that same rate, where before there was no cost for that. So that's to kind of indicate how sharp within the past few days interest rates are rising right now. So we're having a pretty steep increase here. Part of it is obviously the hot market of the stock market, so a lot of the money is leaving the bond market, going into the stock market, equity market. That will come at some point to a boil because it's been chugging along here pretty quickly and without a break, and it's just this continual climb. At some point, they're going to have to take a break, and some of that money will come back into the bond market. We do have these opening gaps that at some point will need to be closed up. Also, keep in mind. There's also still, remember when they released the minutes back a few weeks ago for the, it was back in this day, back around here, end of December, looked like when we had the minutes released, or actually it was right here, I'm sorry, middle of January, we had the minutes released, and it spooked the markets because there's several Fed members that were in favor of ending the mortgage-backed security or quantitative easing this year, maybe not even by end of the year. So the next meeting will be important. That people will be paying more attention as to where the goal is with the mortgage-backed securities, the purchases. So there's probably a little bit of jitteriness in that area right now. So that's probably another reason why we're still seeing low reluctance in buying mortgage-backed securities, which helps keep our interest rates low. So when the demand is dwindling in that's mortgage-backed securities, as we see down here, interest rates rise. So that's basically how we can see that. And as you can see, the steepness here, basically that's how you're going to see the steepness, and the interest rates are jumping. So if you're wondering why interest rates have been going up, this is the reason. All right, folks, thanks for stopping by. You guys have a wonderful day. Stop by mikesdailymarketreport.com if you want to get your subscriptions emailed to you. There's a subscription to the upper right-hand corner. We don't email you or anything but these videos, and nor do we share your information. You guys have a wonderful day. I will see you guys tomorrow.